Hello, good evening, everyone. So this is a short analysis on China Everbright. I'm doing a video instead of the usual trading view analysis because there's a lot of technical things to talk about with regards to this particular counter. And I believe that aside from the analysis, right, this particular chart, there is a lot of learning opportunity in terms of chart reading skills. So I feel that sharing with a video format is a better option here. Okay, so the reason why I am doing analysis on China Everbright is because if you look at my scanner, my Singapore scanner, China Everbright is actually on the scanner for today. Given that Singapore market has been pretty weak recently, right? China Everbright does show up a couple of times on our scanner during the month of August and now again in September. So the time that China Everbright actually showed up was somewhere around here, and now today's candle also. Back then, the reason why I kind of don't really bother about China Everbright back then is mainly because if we look at the chart, right, it is a downtrend counter. It is a downtrend counter, and usually I try my best to avoid this kind of downtrend counter because most of the time our hit rate, our winning percentage for downtrend counter are not very strong. But sometime once in a while we will have the opportunity to get into a downtrend counter, and eventually we hang on to it until it goes up to like maybe 100% return, 200% return. Maybe China Everbright could be such opportunity, and because of the fact that it is currently at 30.5 cent, right, it is an incredibly cheap counter. So you can put in a small sum of money and with very little risk, and you will be able to enjoy the returns if it does show phenomenal return in the future. But if let's say things doesn't go our way, if it start to go down, then of course we simply cut our loss. But because the share price is so cheap, right, we would not have like a huge portion of our capital locked inside here, and we also will not be losing a lot of money due to this. So in a way, I will kind of see this as a high risk, high reward counter, a high risk, high reward trade that we can take. So let's look at a few things one by one, right? So firstly, I have kind of bring up the fact that this is a downtrend counter, but what kind of caught my attention is that you can see from the somewhere around beginning of 2020, around March like that, all the way until now, right? The chart has kind of been like pretty much stagnant, pretty stagnant. Before that, you can see that it is coming down. It is in a downtrend, but right now it is for the past 1 year, right? Now probably going 2 years already, it is kind of like stagnant. So it does kind of represent that the selling is slowing down. The selling is actually slowing down. And in fact, we can see the slowing down of the selling from this area. So throughout the whole of September 2020 all the way until beginning of 2021, right, you can see this price movement forming here. Like the share price doesn't move so much. And not only that, right, excuse me, the volume during this period is also extremely low. You can see that like almost non-existent. The volume here is almost non-existent. What it represents, or what this suggests, is that perhaps there isn't anyone selling ready. Low volume mean either there are no seller or there are no buyers. And perhaps for this case, right, probably there's no one selling ready. And even if there are like 1 million buyer queuing at, let's say, 21 cent, but if not a single seller is willing to sell at 21 cent, right, then volume will be very low also. Even though buyers are willing to buy, there's no one selling to them. Hence, no transaction was made, and hence the volume is very low. And you can see that immediately after this this dry spell, this drought of low volume, little to no transaction, right? Big volume come in and price immediately start to slowly go up. So this volume kind of represent the buyers. They kind of like imagine that they are queuing at 21 cents to buy China Everbright for very long. They have been queuing from September all the way until like January 2021, and they realize that, hey, nobody is fulfilling our buy orders, but I really want to buy this. So what do? They buy up. They buy at a higher price. They buy at 22 cents, 22.5 cents, 23 cents. Hence you can see that there's a lot of buying volume coming in and price start to go up. Okay. Then similarly, sometime around 2021, around May to somewhere around July, somewhere like that, right? You can kind of see that is another dry spell again. There's another dry spell, but unlike the first time, after this dry period, price kind of go back down a bit. But this price going back down is most likely caused by a few weak holders, a few retailers that are kind of taking this opportunity to cash out, mainly because price have gone up by quite a bit, right? Maybe they might want to get out, because you have to understand the fact that since this counter has been a downtrend for a very long time, right? Perhaps there are a few traders who have been stuck for like very, very long time ago, and they are just trying to sort of like quickly run out of the counter while it is still going up. But it doesn't really matter. It is a moot point, because eventually, right, the buyers immediately come back in and push up the price anyway. And now we have kind of broke through this resistance level at 0.28. Initially, it was broke through around 6th of September, this particular candle. It actually broke through. It shows up on the scanner. It shows up on our Nimbus scanner. But the thing is that we were not really, we were kind of reluctant to take the trade because of the fact that it has been in a downtrend, plus we weren't really comfortable yet. But looking at the scanner today, right, it does seems to paint a picture that perhaps all the seller have kind of like dry out, and China Everbright is sort of like finally getting ready to go for a sustained uptrend in a way. Because let's say if we kind of like enter China Everbright at this portion, when at the first time when it broke out, right, there is a high chance that seller can come in, price get resisted, and it started go back down again, and then it started go sideways again for like the next 1 year, 2 year, who knows. But that doesn't happen. That didn't happen. Price continue to go up. So it does give us the assurance that, okay, maybe there's really no more seller here already. There's really no more seller at this range already. So if buyers want to buy, right, they have no choice but to buy up, and hence it is going to cause the price to go up. So I do hope this is like the beginning of a very good sustainable uptrend. And if you are willing to sort of take the risk on buying a downtrend, maybe this is a good risk to take, because you are going to get it at a very, very good price. And let's say maybe in the future, 5 months from now, 6 months from now, China Everbright start to go up, and we see more and more signal coming in. We see that our scanner keep giving us China Everbright. Of course, we are going to add more position, and those who kind of like miss the original one, right, you still have a lot of opportunity to join in. But those who decide to take the risk and join in earlier, you will definitely get it at a very, very good price. So you can see that if the price stagnant for very long, but you start to see a lot of big green volume coming in, right, it does mean that a lot of buyers are buying at this particular level, and usually the trend, it is a sign of a beginning of a very, very good uptrend. And from that aside, right, when we kind of look at the fundamentals a bit, okay, firstly, I will admit that I'm not really a very good fundamental analyst, but I do look at the basic fundamental, like something that is very, very obvious, like it is the same level as how technical analysis buy a uptrend. So for fundamentals, right, we have to see something that convince us that, okay, this stock is most likely going to go up. And from what I can see, right, the year-over-year revenue has been slowly increasing over the years. You can see that from 2017, 18, 19, 20, right? The revenue is increasing and the net income is also increasing. The profit margin is also increasing. And when looking at the ratio, right, is price to earning ratio is only 4. 4 is like a ridiculously low number for a PE ratio, because most of the time, anything I would say as a general rule of thumb, anything that is kind of like below 10, I will consider it as a undervalue lah. Of course, PE ratio is very industry sensitive. For example, if you are in a financial industry, you will expect a different level of PE ratio to be considered undervalue. If you are in an oil and gas industry, right, it will be like another PE ratio that you will consider it to be undervalued lah. For in any case, right, the number 4 does represent a very, very low PE ratio. And if we kind of compare across other company of the same industry, environment management, water management, right? Sadly, high flux is not around really lah. So we can't really make use of high flux. But let's look at China Everbright stock analytic, right? Let's kind of like look at this. You can see that we don't really have much peer to compare ourselves with. China Everbright is at a PE ratio of 4.3. We have the next one with Sound Global Limited. I'm not sure what company is that, but that have a PE ratio of 11.12. So 11 is somewhere around, I would say, a fair value, I guess, but 4.53 is, regardless of whichever sector you are in, right, it is a very, very low PE ratio. And you can see the net income has been increasing year over year lah. So although I'm not a very, I would say, comprehensive fundamental analyst, I can't really do things like those discounted cash flow model or this kind of stuff, right? But this is just to kind of support the technical analysis lah. If we see that, okay, the TA shows things are like finally about to go up, and if it is supported by a good year-over-year increase in revenue, right, of course, that gives you a little bit more confidence in taking the trade. So of course, when we are looking at this, we can't really give you a timeline, because I always emphasize that timeline is something that we cannot reliably predict. We cannot, not reliable, there is no analysis out there that can predict the timeline for you. For example, if I say this one can go to 50 cents, there's no form of analysis that can tell you if it's going to 50 cents in 1 day, 2 day, 1 year, 2 year, 3 year. Hence, that's why investment exists, because investment do a very, very long 10-year, 20-year to totally eliminate the time frame altogether. But for us, short-term investor, right, we kind of have to play with the probability. So if my point is that if you are going to this particular counter, if you wish to take this trade, right, of course, you must have the holding power lah. You cannot enter today and then expect to be very, very profitable by like next week, like that. You must have the holding power. And one thing I kind of like about this counter at its current level is that we have convincingly broke through this resistance. Previously it wasn't that convincing. It kind of like broke through and then hover around there. Then you have this candle that's showing up here that like sort of like hinting that hey, we might go down. But when this candle shows up, it is like a very clear-cut signal. It is like a very clear-cut signal. And we kind of have a higher low that was being established here. So a lot of things are kind of pointing into the direction of bullishness. So I do hope this analysis help you, and make sure that when you are entering this counter, ensure you have very good holding power, very good holding power. Make sure you don't enter your entire capital into this trade, because if you get stuck, right? If you get stuck for like 4 or 5 months, right? Then even when the counter is very bullish, you might not be able to hold because your heart itchy, your hand itchy, you want to go and buy something else lah. Then you will end up selling this counter, like if you buy a too big of a lot sizing. So manage your lot sizing a bit, manage your risk a bit, and ensure that you can hold, right? I do believe this will be one of the, I would say, profitable counter in 2021, hopefully going into 2022. So, okay, so have a safe trading week, and I do hope this analysis helps you in your trading.